Today in crypto. Have you noticed what is happening in the crypto market and wondered if maybe now is the time to start investing, but at the same time wondered if the frequent ups and downs in price could make investing in crypto too risky? If this sounds like you, you may want to explore crypto staking, an investment strategy that lets you get more from your crypto holdings just by holding your crypto. Staking isn't affected by the natural swings of the market, so you can gain whether the market is gaining or losing. At its simplest, is like mining. Like gold staking of yore, crypto staking is a way to build on the value that already exists, though not in riverbeds or in mines, with pickaxes and heavy machinery, but in the crypto you already hold in your portfolio. How, then, do you benefit? Staking is a fundamental part of blockchain operations and supports the network of the token being mined. The benefit, or reward, proffered by the network, is a bonus given for your investment. The reward is not in cash or gold, however. It is a reward extended in addition to the held cryptocurrency. Staking ADA. Your reward is more ADA. At eToro, staking is rewarded in automatic monthly payments depending upon the percentage yield. In this sense, crypto staking is less like gold mining and more like an interest-bearing savings account. Cardano, ADA, is an open-source blockchain project built on peer-reviewed research. Public and decentralized, it supports smart contracts, and its cryptocurrency is known as ADA. Launched back in 2017 to offer a fast and secure blockchain platform, Cardano's July 2020 Shelley upgrade was undertaken to enhance the crypto's commitment to decentralization and autonomy. Another important feature of the move to the Shelley era, especially for ADA traders, the beginning of staking for ADA. At first glance, Cardano staking looks like the staking systems of other cryptocurrencies. Hold and stake the crypto assets to help the token's network and get compensated for your participation. However, Cardano is quite different in one crucial aspect. The system, in an effort to make certain there are a sufficient number of node operators within its realm, does not approve solo staking. Thus, to partake in ADA staking, you must choose to set up and facilitate your own ADA staking pool, opening it up to other member investors who entrust their holdings to you, or join another staking pool, delegating your ADA assets to their pool. If you decide running or joining someone else's staking pool is not in your future nor in your best interest, how can you reap the benefits of staking Cardano? By trading and holding your ADA on a platform like eToro. Trusted and secure, eToro was one of the first regulated platforms to extend staking for Cardano, ADA. With eToro's new staking service, you can earn Cardano rewards automatically every month just by holding your crypto on. Your crypto tokens remain yours, held in your portfolio like your other investments, reaping the rewards of staking without your taking any action whatsoever. Executed entirely, securely, and transparently by eToro, your staked Cardano is reaping some of the most generous rewards in the market and is executed with 100% transparency. When you stake crypto on eToro, you will know exactly how your monthly rewards are determined. Cardano is one of two crypto assets currently supported on eToro. The other is TRON, TRX. We are thrilled that eToro has chosen TRON as one of the first assets to be offered on their new staking service, said TRON's founder Justin Sun. Services such as eToro's new staking service takes the complexity and confusion out of the staking process, and makes it accessible to everyone. As with Cardano, staking TRON offers users the ability to reap monthly staking rewards just by holding TRON on eToro's trading platform. Check out eToro's entire offering of seamless crypto services. Sign up and open an eToro account for free here. Disclaimer: crypto asset investing isn't regulated in most EU countries and the UK. No consumer protection. Your capital is at risk. Bitcoin blasting above $50,000 per coin made it clear that the parabola would continue, marking the third major parabolic phase in the cryptocurrency's short life cycle. Commodities trader Peter Brandt has seen many price charts throughout his storied career. This sort of behavior in an asset is rare, according to Brandt. But 3 times? That's historic, he says. And according to a chart Hess shared, the parabola has a lot more to go before it is at risk of breaking down. Bitcoin was designed to near perfection as an economic ecosystem. The self-sustaining network lets users store and send BTC all without a third-party intermediary. Miners power the network by providing hash rate, and for their time, costs, and efforts, they are rewarded in coins. Related reading, no end in sight. Record-setting Bitcoin rally breaks past $50,000 every 4 years. The reward Bitcoin miners receive is slashed in half, throwing off the delicate balance of supply versus demand enough to highly favor price appreciation. The impact of the first and even the second halving happened naturally, but this time around, investors banked on the third time being the charm. Another parabolic uptrend has begun, marking the third time that Bitcoin has done so since its code was first released onto the internet. Lightning rarely strikes twice, and parabolic moves of this nature longtime trader Peter Brandt says are extremely rare. Happening twice is shocking, and 3 times, Brandt says, is downright historic. Peter Brandt says that parabola 1 time is rare, 3 times is historic. Source: BitcoinTradingView.com. Along with Brandt's comments, the commodities trader and longtime Bitcoin supporter also shared the chart above, clearly defining each parabolic advance. The curve itself more closely matches the trajectory of the second cycle, while the cryptocurrency's relationship with the moving average on the chart better matches the first post-halving bull market. Brandt is considered a classical technical analyst, who relies on very few tools in the most basic of shapes and patterns. A channel the trader has drawn projects the top of the current parabolic phase to be much higher than current prices. That's not to say that Bitcoin cannot correct back down to touch the moving average or the curve itself. It just suggests that the full extent of the move hasn't yet been exhausted. Not even close in terms of dollars. Related reading, Bitcoin hasn't reached mania stage yet. According to this metric, wherever Bitcoin tops, the fall is going to be devastatingly far this time around. A drop from $20,000 to $3,000 is crushing enough in terms of total percentage drawdown, but because, as Brandt points out and has been right about in the past, assets typically crash 80% or more when the parabola is finally violated, things will be exceptionally brutal. An 80% fall from top projections around $200,000 to $300,000 would result in a loss per coin of $160,000 to $240,000, taking Bitcoin back to, interestingly, this exact price point where support for the next bottom could be building. The relatively illiquid side options of trading have slowed the passage of information between option markets and underlying assets. Delta Financial launches new projects to revolutionize the DeFi space. This post seeks to explore this new project and its potential impact on the decentralized finance industry. In September of 2020, Delta Financial launched Core Vault, which offers a new form of liquidity provision. This liquidity provision, called Open Vesting Liquidity, allows users to participate in the DEX without purchasing Core LP directly. The anonymous Delta team announced the launch of a new Delta product and token called What is CoreDEX, and how does it work? According to Delta Financial, the new product will bridge the gap between options trading and markets. Today, most financial tools are fragmented, and users are forced to shuttle from one provider to another. CoreDEX aims to bring all these providers together to make the marketplace efficient for users. Delta Financial team hopes to achieve its goal by employing a combination of liquidity standards. These liquidity standards will help to deploy an on-chain options layer while ensuring stability. Over the past year, the DeFi market has experienced unprecedented growth, and many players are emerging in the industry. Some notable names include Aave, Hedgic, Open, List, Nexo, and Premia. The Delta Financial team is planning on using a completely different approach with the launch of their new product. Thanks to their new liquidity format, Open Vested Liquidity, OVL, the new product looks promising. Open Vested Liquidity makes it possible for liquidity to be locked in times of volatile movements. This will ensure the Delta token price will be relatively stable and not bow to the market dynamics. Therefore, there will be reduced risk for those holding the CoreDEX and other tokenized assets. The minimization of risk is one of the major focuses of the Delta Financial team. The use of CoreDEX, the new Delta token, CoreDEX, launched by Delta Financial, will play a vital role in creating a healthier marketplace. Today, the crypto market is still in its infancy, and uncertain market conditions in underlying assets and liquidity can amplify market volatility. Delta Financial said the primary liquidity to buy tokens would come from a bonding curve pool in their recent black paper. They also revealed that Ethereum would be the main countercurrency. According to the Delta team, the target liquidity for the bonding curve will be between 1,000 to 1,500 DTH. Meanwhile, the ratio between the bonding curve liquidity and the liquidity reserve vault can fluctuate. However, the fluctuation depends on the initial stake during the limited staking window. In the end, the Delta team says their mission is to promote healthy price movement in the marketplace. Every fund raised during the initial staking window will go into the Delta project's overall long-term development. 26% of the money raised will nurture strategic partnerships and growth, while 10% goes into research and development. At the time of writing this post, the Delta team is yet to announce the official date for the limited staking window. Bitcoin News Roundup for February 17, 2021. With BTC surpassing $51,000 and analysts remaining bullish on the price, CoinDesk's Market Daily is back with the latest news roundup. Russia's crypto tax bill passes first reading at State Duma. The bill proposes to recognize cryptocurrency as property for purposes of taxation. Hit the like button and subscribe to the channel.